You're in the Business Insurance Zone with me, Steve Savant, syndicated financial columnist and contributor to Backroom Technician. This week on The Biz, the Disability Insurance for Individuals series, our tribute to Disability Awareness Month, May 2013. And on today's show, our introduction to disability with Marcy Pruitt.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. I'm your host, Steve Savant, and we're broadcasting to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain. And with us today, back from her great show we did for March Madness on all that was DI, Marcy Pruitt. Hey, Marcy.
Thank you. Good to be back.
Did you like that show? I mean, that was really a fun show.
That was.
And you called out the people who are really the players. And of course, we're in DI Awareness Month. And I keep saying, why don't we do more DI? I mean, we have people, we sell a ton of life insurance. We sell a lot of annuities. But it seems like we're not really dealing with disability. In fact, actually, even long-term care gets a little more play than DI.
Absolutely. And three things can happen in your working career. You live too long, you die too soon, or you become disabled. So not funding a disability is not creating a proper financial plan.
Well, I took one of your patented stat pack, we call it. And there are so many, I'm not going to talk about them all in the air, they're just fun. But if you say, Steve, I want that statistical stat pack because it really frames the argument. I have an article coming out about the Vegas odds of disability because I really want you to understand some of these numbers. And I'm just going to touch on a few of them. Marcy, I'm looking at this, and this is why I was surprised because of the stat of the age. It says just over 1 in 4 of today's 20-year-olds will become disabled before they retire. I was wondering, wow, why did they start even clocking this so early?
Right, and we'll look at the extreme sports and other things that young people do, and they just don't think it'll happen to them. They're invincible. But the reality, you are 10 times more likely to become disabled during your working career than to die.
Well, I'm looking at this number, and it's a staggering number. This isn't even up to date to 2012. We're still waiting for those final numbers. But last year, we had over 2.5 million disabled workers in their 20s, 30s, and 40s receiving Social Security DI. Now, I'm not talking 50s and 60s, which I thought that's where the numbers are going to be. But that's the number. And the average long-term DI claim is for 31.2 months. Now, according to these stats, it's coming from the Disability Fact Back from Jen Reed. So I'm looking at numbers that say, wow, these are greater odds than you'll ever die,
right?
Even on a term platform. These are greater odds, especially at these ages, of need of long-term care, and yet we don't bring it up. And what really could be interesting, we're going to talk about this next week on business, is we're always looking for something to differentiate our practice. What's going to cut us out of the pack, make us look really specifically and uniquely different than other advisors that are going for people's insurance and their securities and so forth.
Right.
And I think DI is the play.
I agree, and it's an undersold product. You do not have a lot of competition. To open the doors with the need for paycheck protection is so critical because every working American should have it. If you rely on your paycheck to pay your bills, then you need paycheck protection.
Well, let's talk about that because I think disability insurance sounds so formal and MBA. Let's talk about it like you just framed it.
Right.
Paycheck insurance. I want to ensure that my paycheck's coming in here every day, no matter if I'm disabled or not. And as I get older, and I think it's more critical because now I'm really up against the odds. Right. So now I'm crossed over. I want to be able to have coverage to take care of my paycheck. Everything I'm doing, my mortgage, everything that I'm subsidizing, if I'm not around to take care of this on a death, well, my death claim will pay some of this. But if I'm around, but I'm in disability, I'm kind of concerned because I see so many Americans, and especially people who really do need to protect their paycheck, aren't doing this. Do you have a reason why people kind of look back at this? Because I think a lot of people say, wow, too expensive.
Right. Well, it won't happen to me, or I have money in the bank, or my family will take care of me. But the sandwich generation, which we're taking care of aging parents as well as kids going to college, and mine are finished. But as we paying the bills and paying your mortgage, and statistically, again, if you're not protecting your paycheck, more foreclosures happen due to the result of not having a paycheck.
I was looking at the statistics on that because I found out that some of the surprising medical bills and being in disability are the greatest causes of bankruptcy filings in the United States.
Right. Well, and we fund for all other perils, and in fact, our income is our largest asset. So if we're not protecting the income, everything else goes away. We're looking at higher deductibles on healthcare now. So if you're willing to do a $10,000 medical deductible, well, there's a chance you're going to be out of work for a while if you're hitting $10,000 out of pocket.
Now, I have to say a little personal confession here. Back when I was 38 and a young man, still I thought 38 was still young, I was playing tennis in a match with my wife, and I pulled my Achilles tendon off my leg. And back then, the rehab was really brutal, and I was out 9 months, and I had disability, actual, not just short term, but I had regular disability,
right.
And I had a 90-day elimination period, and back then I had young kids. We were still growing our practice. I'd only been in the market, insurance market, like 3-4 years. It was critical. That would have hurt my family not to have that check coming in, and I was really glad I had it.
Well, absolutely. And even if you're saving 10% of your income a year, 1 year of disability can wipe out 10 years of savings. So we have all the stats, and we would like to share the stat pack, but you need a story. That's so critical. And there's your story. I mean, what it can do to you. So everyone has either knows someone that's been disabled or has been disabled. That's a question you can typically pose, and everyone is aware of someone.
Listen, this stat, and this is a government stat. This isn't coming from a DI carrier. This stat says 1 in 7 workers will be disabled for more than 5 years. That's coming from the Social Security DI. I mean, these people see this every day.
Right.
And the average, this is what got me, 1 in 7 for more than 5 years. For more than 5 years.
And the definition of Social Security is much stricter, and still 70% of the applicants are declined to go through the appeal process. So it is
a lot
important.
of people think, hey, I got Social Security DI. What do I need this for?
Right.
The numbers are nowhere near it. You just said how tough it is to go through the gauntlet of government, qualification.
Exactly.
It's brutal. When we come back from the break, we're going to continue our introduction into disability insurance, part of our disability insurance series with Marcy Pruitt. Hey, and don't forget to enroll in IULUniversity.com for the best training, education, and sales support when it comes to life insurance for retirement income.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Did you know the average 401k runs out of money just 7 to 8 years into retirement? Time Magazine, the Wall Street Journal, and many other publications have warned of the difficulty of saving with a 401k. But what if there was a way to create tax-free lifetime retirement income with no stock market risk? Good news, there is.
Living in fear of the next market dive is not the way I want to live my life.
Why would I go out there and take on risk when I don't need to?
I have a lot less stress knowing I can't lose any more of my retirement savings in the stock market.
Call now to receive your free, no-obligation analysis of what this retirement vehicle could do for you, a comparison to your current retirement plan, and a free video that explains this exciting opportunity. Start planning a retirement you can enjoy instead of worrying about future tax increases and stock market losses. Creating income that will last your entire life is the most important thing you'll ever do. Take control of your future. Call now for your free analysis, comparison, and video.
Well, welcome back to the Business Insurance Zone. I'm Steve Savant with Marcy Pruitt. And remember, you can order today's materials at thebiz.tv. And while you're out there, click on the Backroom Technician icon for your 30-day free trial offer to access the best needs analysis and sales support material for financial planning and client education. And remember, I've been using that for 22 years, and it's golden, and I'm using some of it for today's show. Before moving forward with any things you hear on the show, especially when we start talking about, if we talk about it this week, disability and deductions and things of that nature, always talk to your tax advisor, and if you're FINRA licensed, your broker-dealer compliance officer, before using anything on our show. Not that we'll ever be out of compliance, but I just say that to cover my back. We're talking about our introduction into DI, part of our disability series, all this week and next week because it's the month of May. We're talking about DI Awareness Month. When I think about this, I think about, does it matter? And some of our agents, especially our FINRA registered rep agents, they have to kind of watch who they use in carriers. Is the company rating matter?
The company rating does matter, although you're not typically going to deal with a carrier with less than an A-. Your E&O insurance and other reasons. You're going to look at quality companies. And with the consolidation of the industry, we're down to really 23 carriers left selling disability. So with the mass exodus in early 2000, there's not as many carriers out there selling it today.
Do you see from contract to contract, policy to policy, a lot of changes or differences in the definition of what disability is?
I think with the traditional individual carriers, they're very similar. It is a definition of disability, not just a loss of earnings contract, but defining your occupation and the inability to perform your duties.
When you see it, you see so much of this sold? I mean, this is all, you live in this arena. Do you see elimination periods? Because a lot of people they use their deductible for their car.
Right.
They use their deductible for their house. They use an elimination period for the medical. Maybe the same for long-term care. What do you see is what's the shortest and what's the longest you can have on full long-term disability?
Well, and they are two distinct products: your short-term market and your long-term. If you can't pay your bills for 90 days, what in the world will you do to retirement age? So a long-term policy can go as short as a 60-day wait, but we're typically looking at 90 days. And then remember, that's really 120 days till your first claim check.
Now, why is that different? Because I thought, well, 90 days is 90 days.
Well, it's a 90-day elimination period, and the carrier does have, depending how quickly you send in notice to the carrier has up to 30 days to make that first payment. Of course, then they'll catch you up. So it's a 90-day wait, and then you're on waiver of premium.
When I think about this, people are looking at the numbers, and do you think, strictly by the numbers, premium, the value, I have to shell out X amount for how much I'm making? Is it 2%? Is it 3%? What am I really throwing down on the table every year to protect my paycheck?
That's a great question, and it's about 2.5%. So let's say you make $100,000 a year, you can insure roughly 60%, so $60,000 tax-free dollars a year for $2,500 of annual premium.
Now let's talk about that just for a second. I mean, I guess if I'm in the higher the tax bracket, that really makes a big difference then, because I'm not worried about FICA, FUTA, SUTA. My DI is coming to me free.
Right.
Now, can you take Social Security DI and DI at the same time?
You can, and I like to see the Social Security in addition to what you purchase on your own.
Do they underwrite because of that, though?
Well, some on blue collar carriers or blue collar and gray collar occupations, there may be a Social Security offset, but in the professional marketplace, you really want to purchase your individual coverage to lay on top of Social Security.
And because of professional, you may have actually short-term group at your business. That could actually be happening
Absolutely. And then you can look at a longer elimination period, let the short term, which is company provided, and then dovetail that with the longer elimination period to make it more affordable.
Marcy, let's say I'm a young person, and I was a young person at one time, I just want you to know that. If I'm a young person, 35, 40 years of age, do I really need to think about inflation protection? Now, a guy like my age, I have DI now. I'm not so much worried about it. Probably another 2-3 years, I'm going to be 65. I'll have to go and find a carrier that gives me post that. But for our young people, is inflation protection something that you would recommend?
I would, if you can afford it. It is about a 12 to even 15% load to the premium. But if you can afford it, I mean, is inflation going up or down? So if you were to purchase $10,000 a month today, and you became disabled and you were going to be on claim for 20 years, that $10,000 would be frozen unless you have the inflation protection.
What's the difference between, I hear people always talk about the partial benefit or the residual benefit. I mean, is that the same thing?
Well, people do use that term interchangeably, and partial typically is designed for a 50% benefit for a flat 6 months or 12 months, where residual is truly a percentage of income or a proportionate amount of benefit.
So you might be fully disabled, but then you're coming back, you can work part-time, so the benefit goes part-time, is that correct?
Correct.
Now, do you have to actually sign up for that, or is that pretty standard boilerplate in a contract?
It's not boilerplate. It's I'd say with half of the carriers, it's an option to add the residual. And you want the residual because most claims will have a residual portion. Either you're totally disabled and you recover and come back to work, or you have a debilitating illness where you start out partially disabled and it becomes total. So there is some crossover with that.
Is there a real difference? We talked about inflation right here for a second, but what about the difference between that and cost of living? Is that different?
No, that's the same. There's so many acronyms in the disability and insurance world, but cost of living adjustment is an inflation protection rider.
So it's purchasable, and that is something you recommend, especially with young people.
Absolutely, with young professionals. And remember, at the time of underwriting is when you want to add the riders that you may need. You can always drop them off in the future as your net assets grow.
So you recommend putting riders on at the front end, and you can always adjust it as the life of the contract starts going out, maybe 5 years, 10 years, or however long.
Absolutely. That's the beauty. You can adjust it, the carrier cannot.
Remember, you can watch this show and all our shows this week on DI at our website at thebiz.tv, and you can follow me on Twitter, Facebook, LinkedIn, and Pinterest, and Google+. Well, that's the Buzz on the Biz for today. You've been in the zone, the business insurance zone.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.